That's right, everyone. I have become a buyer's agent. I'm just joking. I would never do such a thing. Don't worry. But I did put out a post about 2 or 3 weeks ago requesting to put their information, what they're looking for in their next investment, and that I would look to give you suggestions and ideas. And before I do start this video, I do want to say that none of this is financial advice. I don't recommend, I don't suggest. I'm just putting out my thoughts and my ideas based on certain situations and scenarios of where you could potentially invest into. At the end of the day, it's your decision, it's your life, and it's your decision to make where you choose to invest. This is just something that I would do if I was in your position. That's all. And I'm going to run through 4 different scenarios. And the first one is that this person has $750,000. They're ready to invest now. They're a high risk investor and they have a current investment property or a PPOR in Townsville, which was purchased in 2021. So, right off the bat, this person has done extremely well, making lots of money because if they purchased in 2021, then they've done very, very well. And in this scenario, there are a couple of locations that you could consider going into. Now, the first thing to understand is that $750,000 will get you into most locations throughout Australia. It will get you into Queensland, into very good markets like Townsville, like Cairns, and it'll also get you into New South Wales, into markets like Wagga Wagga, Albury Wodonga, and Dubbo, as well as across Melbourne as well. Now, this person did say they're a high risk investor. And the first consideration I'm going to tell you is that just because you have $750,000 to spend doesn't mean you need to spend all of that money. You can be very strategic about it. You can say maximum I'm going to spend is $550,000. I'm going to bank the rest of the borrowing capacity and then utilize that later for a second or third investment property down the line. Now, obviously, you're still going to have to increase your income and things like that to make it to a reasonable level. But if you use it all up in one go, then it's going to be much harder to continue purchasing more and more properties. So you need to be very strategic about your investments. So with the $750,000, if you're looking for very quick instant equity, one of the locations that you can consider investing into is into Cairns. It's not necessarily a high risk location. I would say it's more or less low to moderate. Locations like Edmonton, Bentley Park, Mount Sheridan, White Rock, these locations are something that you can consider and something that you can comfortably afford with $750,000. Realistically speaking, though, if you're investing in this location, your primary goal is to secure equity within the next 12 months. That's why you invest into a hot market like Cairns. The consideration is that you're going to have to fight with every other buyer's agent tooth and nail, and it's very competitive. There's not much stock available on the market, but you do have the budget to purchase something in this market. And I think it's a very good market. Something you can buy and hold for a long period of time, as long as you buy away from the flood zones and things like that, which Edmonton and Bentley Park are, these 2 locations. And just to show you on H-Tag, it's about $600,000 with a 5% yield, so pretty decent, with 3-year growth of 36%, past 1-year growth at 10%. And we're still forecasting for pretty good growth with very low stock and very high demand. So the right market indicators to consider if you're looking for that quick equity and you really need to make that equity right now. Now, let's say, for example, you want to be sort of counter cyclical and you've got $750,000. Where could you consider investing into? Now, if you're a high risk investor, like this person has mentioned, then there are markets that you can consider. I'm not going to talk about Melbourne, even though you can afford it because you said you're high risk. So, again, Bendigo isn't high risk, it's low to medium. It's a great location to consider investing into long term, very economically diverse. Some of these locations, like California Gully, or the more premium locations like Strathdale, Kennington, are some of the locations that you can consider with that sort of budget to invest into. And if you're not in a hurry for growth, then you can consider other locations like Ballarat, if I can find it on the map. You can consider Ballarat. Now, once again, you can probably buy something pretty easily with $500,000, which means that you can save $250,000 of your borrowing capacity and utilize that in the future. Once again, if you're investing into regional Victoria, then you're really looking for that counter-cyclical movement where you're not investing in a hot market, but looking for a cooler to slash warm market. So those are some options you can consider if you had $750,000 and you're looking for your first investment property. And the only other caveat that I would say, if this is your first investment property, because you have a PPR in Townsville, I suggest buying in good, regionally economically diverse locations that have good long-term foundations because it will set your portfolio up for massive growth, right? If you had $750,000 and you invested into Northern Territory or Darwin, it's not really a long-term play. It's more of a short-term play. And that's the other final location that I would recommend, right? If you have $750,000, you could buy, because you said you're a high-risk investor, you can jump into this market and you can buy something very, very easily with that sort of money, but it's very high risk. It's for short-term gains. You make your money, then you get out. It's as simple as that, right? And if you want more advice, knowledge, investment tips, where to look next, what markets to consider, then you need to be a part of the private community. It is an absolute no-brainer at $35 a month. There is so much value. We talk about different locations every single day. People get tips, tricks, how to negotiate on building and pest inspection, what's the right structuring. They ask mortgage brokers about what's the best finance advice. And there's even more resources and property templates and links. And there's also community calls, all jam-packed into one subscription fee. It's an absolute no-brainer. If you have not already, make sure you are part of the private community because you are missing out if you're not part of it. So jump in. What's the risk? Let's get back into the video. All right, let's talk about the next person. This person has a budget of $500,000 to $550,000. They're ready in 3 months. It shouldn't be heavily negatively geared, and they're looking for a balance between cash flow and capital growth. What should they do? Let's start off by saying, hey, any property you buy or most properties you buy will be negatively geared. Now, we can minimize that if we look for areas above a 5% yield. And with $500,000 to $550,000, it will get you into moderate to high risk markets. Now, this person did not say how quickly they wanted the equity, but regardless, with that sort of budget, you're not going to get into markets that have quick equity like Queensland or Perth, right? You have a much smaller budget. So where can we consider investing into? Well, this is how I approach it. If you had a $500,000 to $550,000 budget, I would really look for a 5% yield because you don't want to be negatively geared. So let's talk about some locations. Now, you can look to New South Wales. In New South Wales, there's a couple of or three locations you can consider. One is Dubbo. Now, you won't get the top of the range property, but you can secure something for around $500,000 to $550,000. You'll get around a 4.5% yield. So not exactly that 5%, but you'll get 4.5%. It's a pretty good location, economically diverse. It can hold it for a long period of time, and it supports 3 small towns nearby. It's quite good, and it's something you should do further investigation on. Now, that's one location. The other location you can consider is Albury-Wodonga. Now, this is one of my favorite locations for a long-term investment hold. It's pretty low risk and something that is very economically diverse. And it's a location that has pretty good yields. And you can, if you're a shrewd investor, find something close to the 5% yield. Now, I have to be honest, finding properties under $550,000 or under $500,000 is getting harder in Albury, or the good quality stock does not start at that price range. You're really looking at the high range of 550. It is a good balance between negatively geared and potential capital growth. That's a market that's shifting. So Albury-Wodonga is one place that I would consider jumping into. Now, there are a couple of other locations, and we're looking at regional Victoria here. Now, really, if you're only 500 to 550K, you're going to struggle in Bendigo, but if you want to, you can look at it. There's another location I would suggest in having a look at is Shepparton. Now, you can find properties easily under $500,000 in this location. You have to be very careful of the flood zones and the public housing zones. You need to be avoiding them. But a good property you can get for $500,000. You can get above 5% yields. It's a great location to consider. It's a medium risk location, not low risk. It's medium risk. It's very economically diverse. Hospitals, universities, etc. It's a good location and you should consider. And the other location, again, a medium sort of risk location that you can think about is Mildura. And so that gives you a couple of locations to consider, which is Dubbo, Albury-Wodonga, and Shepparton as potential locations for around a 5% yield, so you're not too heavily negatively geared, and you can secure properties around 500 to 550K. Now that's some food for thought for you. All right, let's go into situation number 3. This person has 6 properties, one in New South Wales, one in Gracemere, Queensland, 2 in Rangewaver, WA, Whyalla, South Australia, and Hamilton, South Australia. So this person is strong on South Australia, strong in Queensland, strong in New South Wales. And the other parts are his risk profile is moderate, budget is $350 to $500,000 and a time horizon of 2 to 3 years. So in this situation, this person is a well diversified investor, a person who knows what he's doing. So where should he consider next? If he's got properties in New South Wales, Queensland, WA, South Australia, well, the logical step is then to look at Victoria. Especially when you have a budget of 350 to 500K, you're really not looking at Bendigo. You're not looking at Bendigo. You're looking at places like Ballarat, right? Sort of a counter-cyclical investing. You're looking at Ballarat. You're looking at Shepparton up here, like I told before, and you're also looking at Mildura. If I can find it, Mildura up here, which has very good yields, very good price point. You can find anything from about 350 to 500. The market is moving very, very quickly in Mildura. A lot of big BAs are buying there, so you need to get in quick if you want to invest into Mildura, but you can get something between $350,000 and $500,000. And this way, you have now diversified into a different location and you have a different market working for you in your portfolio. And the reason I say to focus on diversifying your property portfolio is because when the Victoria market starts booming and the other market starts slowing down, and then in 2-3 years' time, when the Victoria market starts slowing down and the other markets start picking up, then there's always something happening in your portfolio and you're always growing in equity and there's less risk tied to it. And Victoria really works well with people with smaller budget because there's a lot more locations to choose from, as well as when you have a smaller budget, there's smaller land tax and just less issues when dealing with Victoria, generally speaking. So that's what I would do. So in your situation, I would look at diversifying into regional Victoria. And before I go any further, if you have not already, make sure you purchase the Property Blueprint Self-Education Program, where I will teach you everything about property. It's an absolute no-brainer. We go through various different things like advanced property fundamentals, suburb evaluation, property evaluation, negotiation tactics, strategies when it comes to tax, walkthrough videos and tutorials, and there will also be some bonus content in the future, all for an amazing price of $299. And you also get 6 months free access to the private community worth over $200. And remember, the $299 price tag is for pre-orders only, so make sure you jump in before the full price of $599. It's an absolute no-brainer for the value you get in this course and in this program. Make sure you are educated in property, because without education, you're not going to get very far. And remember, if you don't trust me enough to get the course, that's absolutely fine. No problem. Jump in the private community, learn from each other, learn from me, learn from everyone else. And then if you want to do the program, you can. If you don't want to, no stress. I'm not pushing, but that option will always be there for you. All right, let's go into the last situation. And this person has a budget of $1.2 million. He has a time horizon of 7 plus. His risk profile is medium and he has only one townhouse in Melbourne. His question is, should I invest in one property or two? And my recommendation is that you invest into two properties. And there's a couple of reasons for that. Number one, you have the ability to diversify into different markets when you buy two properties. The other reason is that when you buy a $1.2 million investment property, you will have very low yields. So you have to put more money out of pocket to fund the investment. Whereas when you have two properties, you can find different markets or regional markets which provide higher yields, which are better from a cash flow perspective, as well as a capital growth perspective, because you've got two different properties in different markets working at different times for you. And now a lot of people are medium risk. And if your time horizon is 7 plus years, I would really look at diversifying into strong regional hubs. Now, of course, if you go into Townsville right now, you're buying at the peak of the market. Probably not the best idea. So I would look at investing into Cairns so you can have that short-term growth, which will help fund the next property deposit as well. And you can secure something for around 600 to 650 in this market, right? 650 is more realistic for a good property that you can hold for a really long time. So that's what I would do in that situation. And then you've got a little bit of money left, around $550,000. So what do you do with that? You then take that money and that equity gain, and then you look at different markets like New South Wales or Victoria. And I've already discussed this previously in other portfolios. You should look at markets like Albury, Wodonga, or Bendigo. These markets, you can secure something just about for $550 or maybe a little bit more, so you can do some saving as well, and then you can buy into these markets. And this way, you're diversified into multiple states and multiple locations, have two properties working for you, not at the same time, but in different time periods, and they're great long-term holds, 7 plus years, absolutely fine. So that's what I would do. And remember, once again, none of this was financial advice. Do what you want with this information. I can't tell you exactly where to invest. That's up to you to make the final decision. And this is me being a pretend buyer's agent. And I hope this has helped you. And if you have any other questions at all, leave it down in the comments below and make sure you jump into the private community because there is no better advice and community out there. We are the #1 Australian property community out there. Till next time, thank you.